Hey everybody, Jordan Schwartz here with Strategic Wealth Designers. Today, we're talking about, okay, I got this 10 grand I need to invest. What the heck do I do with it? Let's check it out. So you've got $10,000 and you're trying to figure out what in the world do I do with it. Now, if you'd like more videos just like this to figure out how to invest your money, go ahead and smash that subscribe button and leave us a comment below. So if we're thinking about somebody's retirement planning and we're thinking about someone's portfolio, if you've got 10 grand lying around right now and you're thinking, what the heck do I do with my money? It's pretty simple. The first question I'm always gonna ask somebody in that situation is, well, how long do you have before you retire? Now, if I'm talking to somebody who, let's say, is within 10 years from retirement, versus a lot of you guys who are sitting there right now maybe thinking, hey Jordan, I've got 20, maybe 30 years before I'm actually gonna need to touch this money. What I would say then is that there's two radically different planning methods in terms of what do we do with that money. So if I'm talking to somebody who has 20 to 30 years to go before retirement, I've got 4 different options that I really like, that if it were me, this is how I would invest my portfolio. So if we think about it, option number 1, and this is the easiest way to do it, is go ahead and buy yourself the index. And there's a couple of different ways that you can buy the index. Now, most people will do the S&P 500, some people will do the Dow, the Russell 2000, but most people prefer the S&P 500 index fund, and the reason why, it's the best performing index in the history of civilization. So, if we're thinking an index fund, there's 2 different ways you can do it. Now, if you had this $10,000 to invest, but you were wanting to consistently keep buying through the ups and downs in the market, do what's called basically is dollar cost averaging, where you're buying through the ups and downs in the market. A lot of times it's easier to do an index mutual fund. Again, keep in mind very, very low fees, as low as we can possibly get. We want to make sure we're doing that. Is we want to buy an index fund, and typically an index mutual fund, if you're consistently contributing to the plan. And the reason why is that if you set it and forget it on autopilot, you can auto invest typically those mutual funds a little bit easier. Now, the other way, if you've got a chunk of money, you don't need it for a while and you're wanting to invest it in an index strategy, is using an index ETF. Now, an ETF stands for an exchange traded fund. Basically, with mutual funds, you can only buy and sell them at 4 o'clock during the trading day. An ETF, you can buy and sell it throughout the day whenever you want. It has more trade liquidity, meaning that buys and sells are more flexible. So if we think about it, we've got index mutual funds and we've got indexed ETFs. That'd be the first way, is trying to buy the index like the S&P 500. The second way that you can go about doing it is getting some sort of a portfolio of blue chip stocks, right? And these are the companies that all of you have heard about. You've got Apple in there, Disney, Boeing, big institutional companies that we've all heard about, and we all have those products for ourselves. Now, the reason why is that it's going to largely mirror what the index is doing, but a lot of times when you do that, you're cutting out some of the inconsistencies the index sees from too much volatility. This is better for somebody typically where they want to take risk of the market, but they don't necessarily want to see as much of the volatility. And blue chip stocks can be great because if you look at companies like an Apple, yeah, they're big institutional blue chip stocks that you've heard about, but they still have good long-term growth potential. And the third type, if you're looking to try to hit some home runs, is going with super tech. You could even look at maybe like crypto in here, if I can spell. And then any sort of really risky based investments. So if you think about companies in this category, one of them could be like a Virgin Galactic, Richard Branson's space exploration company. That's a huge long-term growth play if it's successful. Other companies could be like electric car vehicle companies, different cryptocurrencies are being created, and companies that we think long-term are gonna have super growth potential. I like this for somebody who's really young. Maybe you've got 30 years to go before retirement. And keep in mind too, if you're gonna go with a strategy like this that has more risk, I'm assuming you're not gonna need to touch this money for a number of years, ideally a decade. If you're needing to touch this money in maybe 1, 2, or 3 years, this strategy is probably not gonna work as well for you. But if you've got 10 grand and you're trying to invest, these are the 3 best options. I'll give you another bonus option as well. Option number 4. Option number 4, if you can't decide because they're all so awesome, is do a combination, right? Do a combination of all these. Maybe you take a third and put it in an index fund, where you could maybe, if you're not gonna consistently contribute to the plan, do an ETF. Then you take a third and you buy the blue chip stocks that you've heard about, the really well-known institutional companies, and then maybe you take a third and you go with some more of these different speculative plays, like a cryptocurrency, like a Virgin Galactic, galactic, like a NEO stock, which is an electric vehicle car company. But doing a combination of all three of these things in a portfolio, I think can be a great option for somebody as they're starting to get closer and build up this investment plan. So there you go. If I've got $10,000, how do I invest it? Now, if you'd like more content just like this on how do I invest $10,000, what's asset allocation, how do I become a financial advisor, any sort of videos like this, make sure you like our video and subscribe to our channel for more awesome content just like this. Thanks.